This content is for informational and educational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained here constitutes a solicitation, recommendation, endorsement, or offer to buy or sell any securities or other financial instruments whatsoever by Draper Gorin Blockchain, aka DGB, the presenter, or other associated parties for the content being provided. Please do your own due diligence and seek proper counsel.
Boom. Good morning. Alon is not here this morning, and so you get me. And what's that mean? We're going to probably talk some crypto today, and we'll see who comes on and where discussions go. I feel like the buzz in crypto is been kind of silent, and there's a lot of people that I think feel this way. I think it's because we're still feeling some quantitative tightening, but there is a lot still happening that people are not aware of. Hey, we have Nate joining us. Awesome. I'm going to add him to the stage. Nate, welcome. Thanks for coming on.
Of course, of course.
So I've got a whole list of topics to talk about and just touch base on in regards to like what's going on in crypto this morning, right? There's just so much to talk on, and we'll hit on a whole bunch of different points and hopefully get onto all of these. First one that I have on my list, Fidelity is quiet Ethereum treasury move. So apparently Fidelity has quietly launched a 200 million Fidelity digital interest token called FDIT on Ethereum, marketing a stealth entry into the tokenized treasury space. This ERC20 token represents a share in Fidelity's U.S. Treasury money market fund, directly challenging BlackRock's $2 billion BUIDL fund. The move positions the $5.9 trillion asset manager as a major player in DeFi, with BNY Mellon handling custody and only 2 current holders, suggesting institutional focused distribution. So we got both BlackRock and now Fidelity playing in the world of DeFi, and it's on Ethereum. So sorry, Solana people, but I think that's a huge move, and I think we continue to see more moves of treasuries on Ethereum, which I think is pretty bullish. I don't know if you have any comment on that.
Yeah, I mean, if you have Ethereum stock, it's not a bad thing.
It's not a stock. It's not a stock. It's a crypto. It's a crypto. It's not.
I mean, if you have crypto, you know.
It's a commodity here. Commodity. We're
Yeah.
not favoring the size of the SEC on that. Sorry. Item 2 that I have, and if you want to chime in on any of this, just chime in. I'm just going to go through some of these big ones that I have. Okay, so the next one I have on here is the DTCC commits to Ethereum's ERC 3643 standard. The US DTCC, and for those that don't know, that's the Depository Trust and Clearing Corporation, right? This is where we get into stocks. America's primary securities clearinghouse is committed to promoting Ethereum's ERC 3643 standard for tokenized securities. I'm liking this. I'm liking where this is going. This development comes as NASDAQ has filed with the SEC to allow trading of tokenized stocks, potentially leading to blockchain-based settlement. This institutional infrastructure commitment signals major traditional finance adoption of Ethereum's standards. Now, if that ain't bullish, people, on Ethereum, I don't know what is. I mean, that's exciting. That's exciting news to me. I mean, like, I'm dreaming of the day that I can put like tokenized stocks in concentrated liquidity pools and retire off of the yield that I'm making on my trading fees.
Liquidity,
right?
Yeah.
I mean, give me some volatility on Tesla against USDC, and I'm loving it all day long, right? I mean, here's the thing: you got boomers sitting out there, and I'm seeing posts on Twitter now. Granted, I'm sure a lot of boomers, and I'm sorry, I'm not using it as an age classification thing, but I'm sure a lot of people who are near retirement are probably sitting in a money fund, but they're afraid of currency debasement if they're not feeling it already. But it would be really nice if they could hold on to the Tesla stock and still make some money while doing it, right? I mean, not everybody's I was calling it the bicycle approach a couple of days on Twitter yesterday. Really, it's called the wheel approach. But I was thinking of it. Whenever I think of the wheel approach, I think it in terms of a bicycle pedal, right?
Right.
Covered calls and then puts to offset it. It is the wheel
Yeah.
approach. Somebody corrected me on that. I'm like, yeah, you're right. You just think it is a bicycle for some reason. But so that was funny. But anyways, it's like, there's ways to make money using your positions if you hold enough. You can do covered calls, do an income strategy approach where you're doing a covered call. If it gets exercised and you let go of the shares, then you sell the put to buy the shares back, and you can go back and forth. Obviously, I'm not your tax advisor. Go talk to him if you want to know more about this, and talk to your financial advisor. But the thing is there's strategies like that, right? But the thing is with the possibilities of tokenizing crypto, right, or tokenizing securities now, you could create these liquidity pools potentially where you don't have to no longer sell options. You just put in a liquidity pool, and the trading volume that's going through that liquidity pool, because of the volatility of the underlying asset, then generates you fees. And like, to sit there
and it's not just crypto.
And it's not just crypto. If you had this in securities, and you know that, okay, I'm holding this growth stock, but hey, I can collect money on holding this growth stock over time by the volatility of that growth stock. I mean, that's just like a whole new world.
Yeah, night and day difference.
Take it, park my Tesla stock, park my Apple. Okay, great. Maybe I miss out on the dividends, but the volatility might be more than the dividends are paying. Correct. So now, if you're paying less than that 1%, forget it. Go to the liquidity pool.
Right.
That's how I see it. So I love seeing this. I mean, we're probably 5 years off from a lot of this, be my guess, before it becomes my reality becomes a reality. But
step in the right direction, though.
Push the thought process out there.
But it goes back to what you were saying months ago, that this is why people need to pay attention to how their stock can perform it, or how their assets and tokens can perform in a long run, is because if the government is getting involved more and more on this, then you can see that they're going to try and back it more in the long run, at least in the next 3 to 5 years. Yeah. And so then you're starting to play the game of, okay, if I'm not in it, I should get in it now. And if I am in it, I should look at areas where I can go ahead and put more assets and more money into it.
Possibly.
Well,
you need to understand the risk level though. Here's the thing: people should start their educational process.
Yeah, I mean,
if
the government already, this is blatant in front of you,
and figure out what is it that I'm actually missing. Because there's something happening here that they don't realize it's happening. Okay, so another item I have on here.
Okay, go ahead.
Gold price surges. And it gave a note on here because I'm reading the titles that were generated. But one of the things is I talk about often is this is not an endorsement, but I'm a fan of PAX-G and PAX-G's adoption in DeFi. And the reason for that is 1 PAX-G equals 1 ounce of gold. Now, granted, I agree. It's better to own your physical gold, because I know there might be some gold holders out there who are watching this, and I will agree. Yeah, physical gold is always better than paper gold, because there's way too much paper gold out there, and there's not enough physical gold to probably meet all the paper gold claims, right? But what's really cool is in the DeFi space, you can actually get exposure to gold through PAX-G, and so I've done it. Instead of taking profits in the dollars, taking profits into PAX-G and whatnot. So gold has reached a new all-time high. This says 3,500. I thought it got closer to 36 now.
36, yeah. It says it broke
36. I think it's closer to 36 now. So it's driving mass adoption of tokenized gold and DeFi. I think is cool. I think we see more of that. But it's really cool seeing that gold's up there now. It is kind of concerning. I was just looking at a chart yesterday on what was I was looking at TradingView. Maybe I can pull. I don't know if I can pull that up, or I can pull it up on my screen so I can see it. I was looking at a chart on TradingView that was depicting balance sheet, the federal government, the Federal Reserve's balance sheet, right?
Mm-hmm.
And based off their balance sheet, you can kind of see that it's I mean, it's the overall, it's kind of a quantitative tightening. And so like, there's it's interesting that, we see gold's fairly strong, Bitcoin's fairly strong, stock market's fairly strong, and yet we're kind of quantitative tightening still. So, I mean, there's money supply still growing. But so, and then also the DXY, the dollar strength is down right now. So it's just interesting seeing where we're at. But if we all of a sudden, like, let's say we see rates drop, and we see some quantitative easing, like, it's going to be interesting. We're going to probably see a bull market of all bull markets at some point if we get that.
On the gold side or on the Bitcoin side?
Well, no, I just think on everything. We're seeing like an everything market, right?
Right.
It's like, yeah, it's interesting times. Interesting times to be alive.
It's like the expectation that the Fed is going to cut kind of helps the market right now. Yeah,
it does. It does. So it'll be interesting to see if they cut or they don't. Yeah, it's interesting to see where we go from here. I tend to think that we're going up maybe by 2026. But then if we do go up, there will be a big pullback at some point. It's just a matter of when.
Yeah.
The next thing I have on here is strategic Bitcoin reserve priority. So this was a post. So I had Claude go through using our Lunar Crush to pull a lot of this data off of Twitter to give us this feed of news articles that we're talking about today, right? So one of them that brought up strategic Bitcoin reserve priority, the White House executive director has stated that creating a strategic Bitcoin reserve is a top priority for the Trump administration. I thought I've heard some pivot back off of that. I don't know where that's at right now. New crypto advisor Patrick Witt confirmed they are exploring creative ways to accumulating more Bitcoin. With the market structure build also being a key priority, the institutional adoption narrative is driving significant social engagement. Where that goes, I don't know. I'm a big fan of the stablecoin because I think we are going to see more stablecoins. I don't think it gave me anything on stablecoins either. Let me see. I'm gonna have it spit me out something on the stablecoin. I think it's important. I did have it give me some charts, so we have some interesting charts I can discuss, or some values I can discuss on stablecoins. What about news on stablecoins real quick? All right, just throw that up there. Okay. Let's see. We'll go over this one. CBOE, Bitcoin and Ethereum futures launch. So the CBOE plans to launch continuous futures trading for Bitcoin and Ethereum starting November 10th. That's pretty big news. This represents a major step towards 24/7 institutional trading access and is being seen as a highly bullish for both cryptocurrencies, generating massive social buzz across Twitter. So that's pretty big news. What else we got here? BlackRock's major crypto movements. BlackRock has been making headlines with significant crypto transfers, including sending $300 million in ETH and BTC to Coinbase Prime. The firm sold $195 million in Ethereum and $102 million in Bitcoin, sparking discussion about institutional positioning and what big money knows. That's interesting. I didn't know that they sold that recently. So I'm kind of curious on that sale. But the thing is, they're also holding on behalf of other people too. So it's not like it's. I don't think it's not like it's their funds, right? It's investors who are investing in the ETFs. So it's
correct.
With people who are selling ETFs.
Do you think we'll see more firms like BlackRock go ahead and buy up large portions?
Well, I mean, so it just depends on the deposits, right? I mean, they're essentially an ETF, right? And so if more money flows into the Bitcoin ETFs or the Ethereum ETFs, that money will then buy the Bitcoin or ETH, right?
Mm-hmm.
Because it's buying the underlying assets for those who are depositing it into the ETFs. If people think we're at a market top or something like that, and they sell the ETFs, then they have to sell the underlying asset.
Correct. Yeah.
cover those positions, right? And so we're going to see the ebbs and flows based off of people, guessing on market timing.
Yeah.
And so, unfortunately, a lot of people are bad at guessing market timing in Bitcoin. Otherwise, they would have just held, in my opinion. My own opinion, not financial advice, and not a representation of anybody else. Solana ecosystem momentum. Now, I'm not a big fan of Solana. I do hold some Solana token. It says Solana ecosystem momentum. Forward Industries raised $1.65 billion to launch a Solana treasury, while Solana's perpetual open interest topped $7 billion. The network is seeing massive adoption with DEX volumes surging to $2.6 billion in 24 hours, driven partially by world liquidity financial activity. Interesting. I'm not a fan of Solana just because I'm not a fan of meme tokens. Sorry if I hurt somebody's feelings out there. I think there's partially a lot of superficial value in meme coins. That's just my own personal belief. I will, full disclosure, I do own some various meme coins. But if I do, it's very, very little tiny amounts, like less than probably $10.
Do you think the meme coin industry will start to go ahead and cool off a little bit, and NFTs will come back around again?
I hope so, because I have a lot of NFTs. But I mean, but so here's the thing. So you should be asking a different question, in my opinion, and it's will art come back around, or will collectible pictures come back around? Because in my view, an NFT is nothing more than a receipt. The non-fungible token is a receipt, and it's whatever that receipt represents, right? You say
Right.
NFTs. Well, there's NFTs that represent liquidity pools, right? That's never lost value. There's absolutely a value backing it, right? There's NFTs such as the Bored Ape that have the IP associated with the image, where you have ownership of the image.
So you're saying the perception has to change on the NFT side more.
There has to be an education, right? Like I think the world, the general populace is kind of misguided as to what is an NFT. An NFT isn't just a speculative image that I'm buying a picture of. Now, in many cases, it is. In many cases, is you're buying an NFT. The NFT, think of the NFT as nothing more than a receipt that you're trading back and forth that represents the ownership of something under the underlying item.
Right.
Now, the underlying item may be just a JPEG, a picture, or collector nostalgia value, but it has no absolute value tied to it because there's no IP rights. There's nothing other than the fact that it's just a picture. And if you go and what's really important that people need to do if they're going to get into NFTs is go read the darn terms of service for whatever NFT that you're buying, because there is one. There's usually a website associated with an NFT with that piece of artwork. And if you read through the terms of service, it will tell you, do you own commercial use rights? What do you actually own? Is it only a JPEG? And I'm surprised by how many people don't read that, because there's a big difference between a $20 picture that you have no commercial use rights on and an IP on versus a $24,000 Bored Ape where you actually have the commercial use rights on that IP, and that's what you're paying for. You're not paying for the picture, you're paying for the commercial use rights to utilize that picture. And so this is one thing that I think a lot of people miss or just are not educated on in this space, as to why does one thing have value and the other one doesn't.
Right. Yeah.
Well, I think once people understand that and the perception changes, we'll maybe see something different, right?
And I think that's why, it's all this stuff is still so early, is because the education isn't all the way there yet for people to really continue to look at it. More news like the government stuff going ahead, NASDAQ, that does help, because
That's
more
huge.
people will go ahead and look, become a little bit more educated, learn more, do some more research. So yeah.
And they're still not aware.
Yeah.
It's not the news that you hear on Fox News, at night. Like, hey,
you gotta research it. You gotta actually look it up.
You gotta do your research. It's the quiet news.
Yeah.
You gotta
actually go read the articles. Absolutely. Yeah.
All right. So MicroStrategies continues Bitcoin accumulation, which is good. They're eventually gonna own quite a bit. They still already do. Michael Saylor's MicroStrategies, now it's called Strategy, has acquired apparently another 1,955 Bitcoin, worth 217.4 million. I don't know when this was written, so this is not as of recent, probably. But bringing them to a total holdings of 638,460 BTC. That is quite a lot. Saylor achieved a 25.8% Bitcoin yield year to date, with predictions that every American with assets will own Bitcoin by 2028. So yeah, people, I think he's hoping that he's going to be in the S&P 500, and
Yeah.
just through SPY exposure or some ETF or whatever you own will hold some, some exposure inadvertently through.
Right. He didn't get in this time, though. He didn't get in.
No, he didn't get in. He didn't get in. So I don't know. It is interesting. I saw something, and I haven't validated this, but somebody was saying, I think it was like Fidelity or somebody was commenting that they see one Bitcoin being at $1 billion by 2038. And I haven't fact checked that. I got to figure out if that was actually true or not. But I was like, wow, that's a pretty big prediction. I'll be cool with just half that.
Wow.
So who knows, right? I always love hearing people's predictions of what Bitcoin's price was. I mean, Tim Draper said at one time that it's 250. We haven't hit there quite yet. I do agree with him though that we will eventually get at 250. Do we get to 1 million and 1 billion? That'd be kind of cool, but not right now. The real big question is, will you still have your Bitcoin by the time it hits that number?
That's a good question.
Right. That's a good question. I met a guy who's been in crypto for a really long time last night. He is part of the Ethereum ICO, and he's like, I was part of the early stuff, but I didn't end up keeping it, right? Like, and I think that's most people's problems. Everybody has this threshold as to when they want to spend it or use it, and eventually that hits, right? And so the question is, do you have strong enough hands to hodl through it? This guy was in NFTs, and he was into flipping NFTs, and he had what was the one he had? I'm blanking on it now. Fidenza. He said he had like 3 Fidenzas.
He did?
You're like, what's a Fidenza? Do you know what a Fidenza is?
No, but
do you know what a Fidenza is? Okay, so a Fidenza is an NFT art project. It was like one of the early art blocks, right? And Fidenzas are super darn expensive. Let's see if I can find it real quick. Fidenza. No, I think it's okay. Actually, it's art block.
Oh, the collection by Tyler Hobbs.
I think so. Yeah. I'm so not finding this right now off the top of my head, but they're like super up there. Yeah, Fidenzas by Tyler Hobbs. Yeah. So they're like going for like 40 ETH right now.
Wow. Yeah.
That's a big chunk of change.
That's a big chunk. And he has how many?
This guy had 3 of them.
Had 3.
Had 3 of them. And then he sold them and I think went on vacation or something like that. And he's like, I was kind of thinking of, he kind of regrets that. I think it's things in crypto, right?
True.
But, so, I mean, like, you probably didn't anticipate it going to 40.
You probably didn't. But going back to your point about, the question of will someone actually hold as Bitcoin price continues to rise to these all-time highs? Right. I think the more they hold, though, because right now, are there platforms where you could go ahead, if you have a certain amount, you can borrow against it, or not yet, really?
No, you can do that on Coinbase. If you have Bitcoin, if you're willing to put it in Coinbase and you're willing to risk it for the biscuit, you can borrow against it in Coinbase. They got to check their rates. They're utilizing like a DeFi like structure on the back end, so you have to understand the protocol risk and the DeFi risk there. I actually know somebody who's doing that. I think their rates are like, I don't know what rate. Go figure out the rates. But yeah, there's a guy I know who's doing that, and he's borrowing against it. I think the LTV, loan to value, I think it was like 75%.
Okay.
So like that's not too bad.
Yeah.
I mean, so it means if you got a Bitcoin, full Bitcoin, 100,000, you can borrow 75% of that value.
Yeah.
don't know if I'd want to do that, because if it drops, you see a wick down, all of a sudden you liquidate your Bitcoin. That's a bad thing. That causes other taxable events. So, but the thing is, we're getting to a point where we will see that, and I think as volatility reduces over time, as the value accumulates, it'll be safer and safer to do that. Then it'll be like borrowing against your real estate.
So that was way more point with it, right?
Way more liquid.
Yeah. So if you keep holding it, it'll be safer and safer over time.
Hopefully,
as it's going up.
Until somebody decides he just wants to cash out a large amount and dumps it in the same market, and there's not a buyers at the moment. But next one, Ethereum L2 expansion. Sadly, I saw some. Shitting on a base on L2 on Ethereum, likely because a lot of people are mad that Coinbase didn't do a base token, because people want to try to get rich. But other than that, base has been great, and it's definitely more cost effective. The Ethereum L2 layer expansion. So South Korea exchange Upbit launched GIWA, GIWA, a new Ethereum layer 2 blockchain designed to boost Ethereum's global reach. Nearly 30% of all ETH is now staked. That's pretty cool. Wow. Showing strong network participation and growth. Fidelity's tokenized treasury launch further validates Ethereum as the infrastructure layer for traditional finance. So I'm bullish on Ethereum. Definitely bullish on Ethereum. Ethereum and Bitcoin. I think those are the go-tos.
Absolutely.
And all
about Cardano?
Those slaughter haters can hate on, man. It's all good. Let's see. Altcoin.
What about Cardano? Do you think that it's going to go ahead and be strong over time too, or not as strong as like Ethereum?
Saw a funny joke on Twitter. Somebody's all like, "Oh, I just got rugged," and he's all, "My wallet just got drained. The hacker sent back the Cardano and said you can keep this." so I'm like that. It sounded a little bit funnier than that, but it's probably not appropriate online.
Right.
I thought that was pretty funny. Do I think Cardano? Sure, Charles. If Cardano could become the L2 to Bitcoin and help Bitcoiners out with transactions and on that, it might have a hope. I don't think it succeeded on the DeFi space like it tried to last cycle. And it's got Solana to contend with. So, but I mean, hey, Cardano's trying. Full disclosure, I do own some Cardano. But I bought my Cardano a long time ago. And like many things, I held small bags of things just in case I need it for transacting on in the future. But yeah, so I don't play enough on Cardano to know enough on Cardano. There's still people building on it apparently though. So
yeah.
Altcoin season indicators. Apparently I've been seeing like something that said like, there's massive sell-offs of altcoins. People are just not in the altcoin market, and like at least on all the extra, I guess, altcoins, I would say, on top of Ethereum and all that stuff. Crypto analysts are noting that altcoins have never been this oversold in history, even compared to previous bear markets.
Wow.
Total crypto market cap, excluding BTC and ETH, is breaking out of a triangle pattern, suggesting altcoin season may be approaching. So that would be hopeful. Yeah, altcoins have just been pretty brutal for them.
That's true.
But then again, I mean, you got to realize we have a lot of coins that are probably garbage. I mean, if you've been in this space at least for a while, you probably have an extended list of coins that are worth less than $10 through your wallet at this point.
Yeah.
And will they come back? Probably never. At least many of them will probably never come back. So that probably hurts that overall chart, in my opinion. Yeah. We'll see what happens on that. Supply chain security concerns. Now, this is a big one. So over this last couple of days, A major NPM supply chain attack compromised 387 packages with 1 billion plus downloads, targeting crypto wallets across Ethereum, Solana, and other chains. While the attack largely failed, it's still highly highlighting security vulnerabilities in crypto infrastructure. So essentially what happened is somebody exploited, I think, a JavaScript package, from my understanding, that was then deployed out. And so when JavaScript does like an update, right, it goes out to all the packages, and anybody that utilizes that JavaScript package in their software is then affected. And so what this JavaScript package was doing was like changing the address. So if you were sending crypto or doing a crypto transaction, the address where the funds would go was actually getting changed and diverting crypto assets to a different address. And so, so this is actually going on right now. So be careful. You doing crypto transactions right now. Verify the wallet addresses that the funds are utilizing. I think Uniswap just said that they weren't affected by this. Check out if you are using platforms or using software or wallets. I think MetaMask said they're not affected, but do be diligent on checking your transactions right now and verifying your platforms that you're using, because there is a JavaScript vulnerability that has been out there. I don't know if it's been fixed yet, and that has been concerning. That's where that joke came in from the Cardano. He's like, "Oh my God, been rugged." You know,
that's where it came from. Okay.
Yeah, that's where it came from, because everybody's talking about this right now, at least on Twitter, about this exploit that happened, or this attack that compromised JavaScript. So yeah, scary stuff though. I mean, it'd be a scary thing, you know, just thinking you're fine. One day you're using a crypto wallet and all of a sudden your phone transferred out, right?
Yeah, that would not be a fun experience to go through.
No, yeah. That's why you always double check your transactions and make sure you know what your address is, where your funds are going, what's going on.
And I think, you know, what we're going to see, especially from the Web3 and AI and a lot of the new data centers taking such a prevalent, you know, kind of like staple from a importance aspect. I think we're going to hopefully see, I mean, this is hopefully, right? You know, more supply chain security, you know, trends going in the right direction, where there's less, you know, still going ahead and you're still going to have risk there, but right, there's less attacks that are going ahead and occurring with some of the advancements over the next couple of years, because it does seem like more supply chain security companies are trying to go ahead and update all their protocols and all their systems now with some of these new advancements.
Yeah. It's still it's crazy to say it's still the wild west in this space.
It is. I mean, if you think about it, when like was it .com era was 1998 started? It's 97.
I think it's a 98. Yeah, I think so. Right around that.
So, from the grand scheme of things, this is still very young, right? With all the advancements that keep happening, right? From the .com to the Web 2, Web 3 that we're on, right? All the new AI stuff. So many changes happening. It still is fairly new in terms of just trying to keep up with everything. I mean, we've seen it on just the venture capital side, with just more supply chain security companies that are startups going ahead and trying to, you know, provide more advancements in technology, more security, you know, minimize risk. And so it does seem like we are still fairly new in this, and it is still wild west with everything going on. But
it's a growing process. It's fascinating to see all this for sure. And what we see now probably, you know, will be so much different from what we see in the next like 10 to 20 years, right?
Absolutely.
And just think about, I mean, you know, I'm a little older, but like I can remember like in '98 what websites were like, and it's just like how much things have evolved. It's pretty crazy. Right. In some ways, they haven't evolved too far, but other ways they've evolved quite a bit.
They've definitely evolved. Yeah.
So be aware of the supply security vulnerability out there right now. That's a pretty huge one. ETF developments. It still amazes me when people don't know that there's Bitcoin ETFs out there. Of course, I sit in the echo chamber of a whole bunch of Bitcoiners and other people in crypto, so we are widely aware of strategy and all these Bitcoin ETFs, and most people I know have it. Grayscale filed with the SEC to launch the first spot Chainlink ETF in the U.S. Meanwhile, Dogecoin ETF launch is confirmed for this week. Interesting. And there's growing speculation about additional crypto ETFs being approved. That is fascinating on the Chainlink side. That's pretty cool. Chainlink is a huge part of the DeFi space. Let's see.
So it gives them access to the Chainlink token without directly
correct.
Okay.
Well, so they'll be able to get exposure to
through the ETF. Okay.
Yeah. Meme coin and DeFi innovation. I don't know how those words go together. The meme coin sector continues to generate massive social engagement with projects like GigaChad, Fartcoin, and other various Solana-based tokens trending. This is obviously when you have things like Fartcoin. That's why I'm not participating. Now, granted, I will admit I own one Fartcoin, and the reason I own that one Fartcoin is simply so I can just see and track and understand the value, because unless you have skin in the game, you don't really pay attention to things. And so by having one, I can kind of see where the market's at. Like if we see Fartcoin start blowing up, so to speak, then you're going to say, okay, maybe the market's frothy, right. Maybe it's to take profit or do whatever you're going to do. It's fascinating seeing some of these things, and of course, most of the time I'm betting on they're going to fall 90%, and usually they do. So it's interesting to watch, right?
Yeah.
I don't believe in gambling. People shouldn't gamble. Don't try to play in meme coins and try to get rich quick. If you like buying lotto tickets and throwing your money away, throw some money away then. I'm not a lotto ticket person. I don't buy lotto tickets and I don't throw money away. Just like, unfortunately, I'll go to Las Vegas and I don't gamble. I don't throw money away unless I know I'm going to win. So if I'm playing against you for some reason, I'm probably planning to win.
Right. Yeah.
These guys got me into fantasy sports now, and I'm like, God damn it. I'm not. I know it's something I can't win at.
You always want to make sure you're the house, because the house always wins.
I like being the house. Being the house.
Absolutely.
Playing the people. Hyperliquid is also gaining attention with its revenue sharing model and buyback mechanism. I don't own anything in Hyperliquid. Haven't really played with it yet. It's not an Ethereum thing, so because of that, I've kind of avoided it. I'm mostly on the Ethereum ecosystem myself, so I can't say I know too much about Hyperliquid, so I'll stop there. Key themes emerging: traditional finance integration, Fidelity's FDIT launch. Right, we talked about that in the DTCC's ERC 3643 commitment. Shows that TradFi is seriously adopting crypto rails.
Really? Nice.
But yeah, I mean, so it's, the Fidelity, BlackRock, and all that stuff. We're seeing that, companies are starting to take things serious. Now, as you're aware, our previous fund from DGH has interest in Onera, which is also working some major, financial institutions, doing some pretty cool stuff out there in the space. So it's really cool because we're seeing this progress of, the crypto rails and the technology actually being recognized. And it's like VHS and Betamax, right? It doesn't necessarily have to be the best product out there, but it just has to work.
Yeah.
And it's working. And the thing is what people don't realize is development and progress is slow, right? And it's kind of like Oracle, right? Once it gets in there and they've already started building on it, it's really hard to shift and move to something else later on, because you're talking about reinventing everything in a company that's already committed 5 to 10 years potentially into building a certain direction. and isn't just going to go, oh, let's move over here to Solana because they've already spent all this time on this, right? And unless there's that 100 or 10x better than the previous platform, they're just not going to pick up and move, my opinion.
Right.
So I think that's huge. A huge point in my opinion. What were you saying?
So question: do you think these moves where you have Fidelity, you have BlackRock, do you think it helps, diminish the amount of dollar debasement, or does it go ahead and just more offset it where it makes, that's why we have alternative measures?
I don't think anything offsets dollar debasement.
Okay.
Because the government's still the government. They're going to still keep on spending.
Keep spending.
Right.
Yeah.
If anything, this just gives us a flywheel to help encourage it, because as dollars go into stable coins, right, on the back end, then they can use those dollars to go buy up the old treasuries. So you get this revolving door system.
Right.
And it's a flywheel that will keep feeding itself.
Yeah.
Issue bonds to print money, and then take the money to buy the bonds, and then you just keep doing this.
You just keep doing the same thing.
What will be interesting is having other governments try to do the same thing with their own version of stablecoins, and then fighting for dominancy. The problem is that other countries like China want to control their currency, and by creating those control mechanisms, you'll reduce the demand for that currency, because people won't want to hold that currency,
right,
if it can be shut down. Now, granted, USDC, Tether, it can all be shut down, but you have to go through a warrant process, and you have to label the wallet, and then it can be frozen in those funds.
Yeah,
the funds can be frozen in that wallet. So what will be interesting that came up as a discussion last night is, okay, well, if somebody had $100,000 stolen from them and they froze the funds in the wallet, can they reissue back $100,000 to the individual? That part I don't know. That would be an interesting discussion to see. I mean, if the funds can be permanently frozen, it's like burning cash. As long as you have the serial number on the cash and you show that it's been disposed or it's been ruined, they can reissue cash if you have a piece of the serial number and show that it's been damaged or whatever it was.
So that's actually a good point real quick I want to make a note on. So like when people go ahead and, there's a hack and they lose some sort of money that's in their crypto wallet, right? Like there's really not a protocol or a system for them to get that money back.
Not an easy one. And you can report it, but they're so overwhelmed by like people reporting scams that it's really hard. So unless it's like millions of dollars, it's not very likely. There are groups that will help you track it down. The thing is what most people don't realize, if they come from traditional finance, traditional finance is all a pull system, where crypto is a push system. And so once it's been pushed, there's no way of reclawing it back unless you find the bad actor who's actually sitting on those funds. And so that's the biggest problem. That's why so many bad people like crypto, is because of that ability that no government, no entity can claw back unless they know who actually owns those funds.
Okay.
So that's the problem with stolen funds, is you can't just claw them back. Now, what they can do is they can issue a warrant, show proof that, hey, this person stole my funds, give the address that's showing it, do the audit report. And after doing so, then they can freeze those funds in that account if they know that it was a bad actor. Now those funds can never be found. Now, the great thing that's about crypto, and really bad for bad actors, is over time you build a web, right? And so it's like the idea of, if you tell a lie, you have to always tell that lie going forward, because the moment you break, like, exposes your lie, right? Well, it's the same thing in crypto. Is you're on a permanent blockchain. We're going to a world where eventually KYC will become a requirement on all front ends, where they'll know every transaction in the space. So if you're interacting with various parties, and let's say you continue to interact with those parties, they'll then go to those parties and say, well, who is this person that you're interacting with? Right. And so all of a sudden, people will start to be exposed, and things that they did 5-10 years down the in their past are going to come back and haunt them because the lies finally out, right?
Yeah.
And so blockchain doesn't lie long term.
Yeah.
So,
short term, people, they'll get
there's
exploited.
a lot of people.
Yeah.
A lot of people are very short-minded, thinking, "Hey, look, I can pull this off right now," not thinking 10 years out where this might go 10 years from the road down the road.
Yeah.
And it may just bite them in the ass down the road. So we'll see.
Yeah.
Time will tell. So we've talked about the gold prices surging, infrastructure. Let's see. So one of the interesting things. So why am I a big fan of Ethereum? One, right now there's between 154 to 165 billion on Ethereum in terms, I believe, in terms of stablecoin volume, which is pretty huge. So you got USDT, USDC, DAI, PYUSD, all these other things. So I mean, like recent growth. Apparently, there's been an added 5 billion in stablecoin inflows in the past week alone on Ethereum. So people would love to say Solana is great, but actually the next one that has the next largest amount of stablecoins is Tron.
Is which one?
Tron.
Tron. Okay.
Tron, yeah, and it's kind of like the Chinese version of Ethereum.
Okay. Okay.
And they have 79 to 127 billion approximately. And 60%, they have like 60% of the global USDT tether transfers in terms of volume.
They have 60%. Wow.
60%, yeah. So a lot of the tether, a lot of other countries are trading in tether, and they're using Tron to do a lot of that trading volume. So if you're in Africa or something like that, you're possibly using Tether and Tron. If you're in China, Tether on Tron. So I wouldn't be surprised if like Tron is the Asian market,
sure.
where Ethereum is maybe the U.S. market in Europe and US. I don't know. We'll probably see some bifurcation like that. Solana does come in third with 11 to 12 billion. But Ethereum's like 10 times that amount.
Yeah.
So I always find it funny when all these Solana maxis are like, "Oh, Solana's taking over Ethereum." I don't know what Rocky would matter. I'm sorry.
Well, yeah, I mean, all they have to.
Yeah. Go ahead and drop me comments. So that's the bulk of what I threw in there for news. And then surprisingly, that took about 50 minutes. So that's good.
That's good.
I don't know what else you have to add, but those are like the big news items as far as I know in the space.
Yeah.
People are starting. It's nice. People are starting to come out of the woodwork. I mean, like I'm starting to see people come back for crypto meetups. They're starting to get interested again and be like, "Hey, well, crypto's doing something, so let's check this stuff out."
Well, I think the networking and the startup ecosystem is starting to expand again and start to show face again. I think 2020 to 2022 really kind of put kind of a fork in the road where it really kind of messed some people up that were very used to their meetups, their networking events, and found a lot of value in that from the aspect of gaining traction, gaining validation. And so then you went into the cycle of everyone just being remote working, right? And so I think there's a couple of things that are leading into it, right? Obviously, you have some of the bigger corporations, Fortune 500 companies now, they're starting to push a little bit more, back to office, right? You have to actually be back in person again. And so I think some of those things are kind of forcing it a little bit, but I think it's definitely good to see because, like they say, I mean, isn't it what the biggest player in terms of business outside of Fortune 500 companies are small businesses, right? Like the biggest factor is small businesses. And so like if small businesses suffer, then it could really go ahead and put a dent in the overall market itself and the economy. And
Yeah,
so I think
100%.
by them being back kind of outgoing again, outside, startups kind of going ahead, finding their ecosystems again, more of these meetups starting to kind of put some more people and some more members into it, I think it helps again.
Absolutely. I was pretty impressed. Elk Grove, local, Elk Grove, did
Yeah.
invest in Elk Grove or Elk Grove Invest, which I guess they do this event once a year where they go and they, allow various companies, local companies to do pitches. And I thought that was pretty cool. I would be awesome to see more cities doing stuff like that. Just, promoting their local entrepreneurs, who are building companies in their city. And it's amazing we don't see that in every city, like,
Yeah.
because that's
You,
kind of an important thing. If you're not growing businesses in your city, your city's dying, in my opinion. Like,
I think that's one of the benefits that when WeWork was on its rise, that it really provided to the cities is exactly that, right? It was, hey, just come to the WeWork. There's going to be an event. You're going to have 40 people there, 70 people there, 80 people there, 20 people there, but they're all the time, right? Because people could just go ahead. It was the new thing, and it was also a space for everyone. And so that I think that's one of the things we forget about because it was more just a environment of you would just get accustomed to going to that versus when it's kind of died down the last several years, you notice that, oh, wait, how come this isn't really happening as much? And so, yeah, I think more cities would benefit from putting on events like that, like you're talking about.
yeah.
But I think also Sacramento's on the rise with some of the stuff that it's doing. You
Well, I
got
hope
the
so.
new soccer stadium there, right? New soccer stadium. I mean, they really remodeled downtown a lot more to make it a lot more friendly to businesses, to the local like community. But then also you have it where you're getting a bigger influx in terms of like college sports as well, right? You have Shaq coming town in terms of the GM side from an investment side of, the GM side for Sac State. And so I think this is going to help from also hopefully, the startup community and the businesses as well.
Yeah, no, I hope so. I hope so. I mean, hopefully we're part of that as well.
Yeah, I hope so. Hope so
Um,
too.
it was funny though. I went to On Chain Summit in San Francisco, and it was a pretty good event as well. But I mean, it still shows you it's small because like it fit in like 2 buildings in San Francisco, or one fit in one building, food in the other building. It was cool though. I found like things like Rect. This is a Web3 based company now. That was an NFT project that is now doing drinks. I actually had
That's
2 of
cool.
these. They were actually pretty good.
Yeah, I
So
like that.
it's cool to see that actual conversion of Web3 products coming into the space and the real world aspect of it, right? And I'm not sure I can find that in grocery stores yet, but it was definitely cool to see at the event.
Yeah.
I will tell you, if there is a crypto event in your area, you should probably attend it. At least if it's a real event, just because it has some of the best swag at crypto events. I swear, man, like crypto swag events are the best.
For companies that are early stage and trying to figure out how to get traction, do you think a lot of those events are really beneficial right now to get either their product validation or to go ahead and see where they're either lacking in certain protocols or in terms of systems? Do you think those type of events that you're talking about could be beneficial, like the one you just went to?
Yes and no. I would say absolutely if you're wanting to get exposure for your product, right? And a lot of times it can be pretty inexpensive to get a booth at some of these events, right? Just because there's not a lot of crypto companies out there, right? And they need people to fill the spots. And so if you are a crypto or Web3 company, right, then it may be easier to get a spot, right?
Okay.
The only problem that I see is we're kind of a niche crowd still, right? And so like I went there with my friend Brian, who's practicing, his Web3 project, and he got some people to demo his product. The thing is it was all crypto native people who are testing it, right? And so
Right.
they already know it. but I think he's trying to reach an audience out there that might not be as familiar with crypto.
Mm.
And so if you're trying to reach that audience who might not be as familiar with crypto, I think it's not going to be as successful.
Yeah.
If you're trying to reach other people who are crypto native, absolutely. And that's just, it's a good way to get a test case and meet other people and get exposure to your project. There was some cool projects. It was funny because I saw some. We were literally there was like 2 or 3 meme coin booths there, and all they're doing is they're pitching their meme coin and talking about what their meme coins supporting, like what their meme coins behind. And like, okay, wow, cool.
Yeah.
Some one of them had some pretty darn good music too.
Did they? Hey.
Yeah, I'm pretty sure he was using Suno or somebody was making music, but they had some good music going around there. They had the full out music video too.
They did.
They were a Pepe derivative, and they had made like animated cartoons with their music. It was pretty cool.
That's pretty good.
At least
I spent some time on it. Okay. Yeah.
So, thanks for joining us today on a DGB show. I'm going to throw their banner up.
Perfect.
If you don't already know who we are, I swear we have these banners somewhere. All right. If you don't already know who we are, DGB website dgb.vc. Follow us on Twitter at DGB Ventures, or follow Alon. You can find Alon. You can find myself on Twitter as well and on LinkedIn. If you are a early stage startup, give us a call. Reach out to us. Always like talking to early entrepreneurs. Even if you just need ideas and you're shooting, want to try your pitch deck, bring it over to us and let's talk. Pretty open to looking at projects and talking to people and throwing ideas out there. We like to be early, and then we like to enjoy the journey with you and help alongside. I think that's our biggest positive, is just being there for the portfolio companies that we're partnered with. Anyways, thanks for joining the show today, and we hope to see you again next time.
Sounds great.
Anything else, Nick?
I think that's it.
Also good. Later, everybody.
All right.